right, welcome back. You're listening to Houston Real Estate Radio. I'm your host, Shanna Register, and every week we bring you news and information you can use on your next real estate transaction. If you've got a real estate question, give us a call. The call-in line's 281-882-8088, 281-882-8088. We'll be happy to answer your questions right here on the air every Sunday between 11 and noon. This segment, we have got a special guest for you. You've heard him before. You're going to hear him again. He's always got the greatest updates on the economy and what's going on with the housing market. Dr. Jim Gaines calling in from Texas A&M University's Real Estate Research Center. He's a senior economist out there and got a lot of great information for us. Welcome to the show.
Thanks, Anna. Good to be here again.
So we just came off of a pretty good summer, right?
Oh, yeah. Things were looking good. I mean, the market is still pretty strong. Houston is just going and going. It's been amazing. One of the interesting things is that statistically, it's going to be one of those kind of years that it's going to be difficult to show big percentage gains, particularly in the sales volumes, mainly because, and I don't think a lot of people realize this, but last year was the second best year Houston has ever had for residential home sales.
And yet it was the second best year, and yet we had so little inventory.
And so, well, that was one reason we had a little inventory, is we were selling them so fast. But that's true, and we'll talk about why that inventory issue. But 2006 was our record year, and that was during the housing boom when basically anybody could get a mortgage that could fog a mirror.
Right.
And so for it to come back this strong, and granted, it's 8 years later. It's still pretty good. But last year was so good that this year, what will really be, in terms of sales transaction volume, we'll be kind of lucky to be able to replicate last.
So you think next summer won't be as good as this summer? Well,
it won't be as good, but it won't be that bad either. Okay. And there's a couple of reasons I'll get into in a minute of why I think that. But one reason that we're not going to leap ahead and have even better year in terms of transaction volume is the lack of inventory. We just simply don't have enough homes being offered for sale. And number one, of course, the home builders are building really as fast as they can. Yeah. And Houston is the only market in Texas right now that last year we built more houses than our annual average. The rest of the state was still below their annual average. Houston beat it. So we had more new home starts. More new home starts, but it still wasn't the record new home starts that we had back in that 04, 05, 06, 07 period. So we're still climbing out of that. And the home builders are going fast and furious. Their problem is lot inventory. There isn't enough developed land. Yeah. That's another issue. Labor, I'm getting that story from every builder that I've talked to, from large to small, that they could build more houses if they could find more cement pourers, framers, plumbers, electricians, you name it, masons, you name it. There's a severe labor shortage to get to the volume that we'd like to see. The shortage of inventory in Houston right now, we're still running a little less than 3 months. Which basically says there's no inventory at all, because a lot of homes that are listed for sale are homes that are going to be difficult to sell anyway. And people are always asking, how come? Well, there's a couple of reasons for that. One reason is the foreclosures and distress sales that we've had the last several years. Those are gone. Yeah. I mean, there are still some foreclosures. There are still some distress sales, but nowhere near on the volume level.
And very few good deals.
And very few good deals. That's the other critical element here. One thing that's happened in our market is it's very clearly defined where the good places are and where the bad places. And it's a black and white kind of, or night and day kind of issue. It's no longer the gray issue going on. But so we don't have as many distress sales. The other thing is, and I ran some numbers here not long ago for the state of Texas as a whole, so the percentage is going to hold true for Houston being such a major market. Close to over 1 million homeowners in Texas in the last 3 years refinanced their homes.
Oh, well, they're not going to be moving for a while.
No, they're all sitting there with less than 4%, 20 and 30-year mortgages. Right. They've got no incentive
right.
to want to sell their home. They're dug in. It's also true that a lot of people, having gone through this recessionary period that we went through, are still a little nervous about their jobs, either in terms of the permanency of the job or the locational status. They may have to move and so forth. So they're not as anxious to start moving around in terms of housing as before. So that's cut down on the rate of people who are current owners that are interested in selling. So the low interest rates were a blessing and a little bit of a curse.
Yeah.
If you got refinanced,
they were a little too low.
No, you don't want to move out. We were talking about, you were asking, is next summer going to be better? Anybody who tries to predict where interest rates are going is nuts. So bear with me. But the general feeling among most of the economists and people who are tracking this feel like, and that's the best I can describe that. I don't know if this is a hardcore projection or not, but feel like interest rates are going to start moving up gradually toward the end of this year, the second half of this year, and on in toward the winter. And by this time next year, it may well be, and that's the best I can give you, that the Fed is going to be looking at the economy and decide to raise rates.
And doesn't a lot of it depend on so many things that are unpredictable at this point? You know, what's going to happen in the Middle East? That has a huge impact on whether we can get the materials we need.
Absolutely.
You know, there's a lot of up in the air.
There's so many moving parts to this. That's the reason I'm being so nebulous about not making this a hardcore projection, but just the feeling. But again, don't forget that the real estate market is very largely a psychological market. It's
right.
What people think are going to happen is going to happen, and so forth. And so again, if people think that interest rates are going to go up, they're going to start reacting accordingly.
That's true. So let's talk about the near future. Going into fall, we always see a decline in home sales. Most people who were going to buy bought during the summer while school was out. So
right.
We always see that kind of lull between September through the middle of November. Do you
right.
think that that's going to be the same this year?
There's no reason to suspect that it won't be.
Okay.
Whether it'll be quite as pronounced in terms of the percentage decline and so on, that may or may not happen. But no, there's no reason to suspect that we somehow we're going to overcome the normal seasonal pattern.
Okay.
School is going to start here in a couple of 3 weeks. People, like you say, are already getting obligated. Sales will probably be good. The July numbers, the August numbers will probably be pretty good numbers. And then we'll see some tail off. And
then in December, do you think we'll get our normal seasonal push in December, everybody trying to close by the end of the year?
Sure.
Always happens, doesn't it?
It's a sort of a tax effect. It's that's the externality of all of that. It's taxes and getting in and being able to claim the property for the full year if you just own it during the year.
Where's the largest growth happening in Texas right now?
Where? Clearly, Houston, Austin, and Dallas-Fort Worth. These markets are. I did some research here not long ago about the projection, and this is a longer-term projection. This is a 30, 40-year outlook. Houston is going to go from about a little over 6 million people right now, about 6.2, 6.3 million people, is projected to go to 14.5 million by 2050.
We're going to need that high-speed rail, aren't we?
We're going to need something. We're going to need something. I mean, when you add, what is that adding? That's adding about 8 million people. I mean, think about it. That's adding a city bigger than Houston already is in the next 40 years.
Yeah, and we've talked about before that the infrastructure is not there.
The infrastructure isn't there. It's creating a lot of problems. I mean, most people think growth is a good thing, and of course we have economic development efforts that want to keep promoting growth and growth and growth.
Right.
Well, the problem is you've got to be able to accommodate that growth.
Right.
And water is going to be an issue. Maybe not as much an issue in Houston as in Austin and San Antonio and points west, but it's still going to be an issue. infrastructure in terms of water, sewer capacity, and services. I mean, I was mentioning water, that's just water, period. But now the ability to deliver water and sewer services to residential and commercial areas. Transportation, you just hit on that. Incidentally, 8 million more people is 7.5 million more cars and trucks. We
That's
run just under 1 for 1. So that's a lot. And that's on top of what we already have. And then let's don't forget, we still have to educate. Education, a lot of that population is going to be 0 to 17 years old. They're going to be in school age, and schools have got to be built, teachers hired, and then just local goods and services, public goods and services,
right.
Fire protection, police protection, hospitals, all kinds of issues there that are going to be accommodated. So that whole thing, that balance of growth that happens in a marketplace, if you have too rapid a growth, the public sector can't keep up. It's just a natural progression. It just can't do it. So while you want growth, you want population growth, you want jobs to be created, you want prosperity.
Yeah.
You kind of want it to be on an even keel where you can keep pace with it.
Yeah, it's going to be interesting to see what happens. It'll be interesting over the next few years.
Look what happened to California.
Yeah, that's a whole nother show right there.
Well, it is, but I use that as the example because they went through a 40, 50-year, high growth period when people were just pouring into the state and they couldn't keep pace with it.
Right. All right. Well, thank you much. We appreciate you coming on the show. Lots of great information for our listeners. Dr. Jim Gaines from Texas A&M University's Real Estate Research Center. We appreciate it.
My pleasure.
All right, if you've got a real estate question, give us a call, 281-882-8088, and we'll be right back after a word from our sponsors.
Hey, I have a question for you. Just how hot is your garage in the summer? Yep, thought so. Hot. And even hotter, right? So what if I told you that there's a product that can now help keep your garage cool? Introducing WindyVent, a revolutionary passive garage ventilation system that works off thermal airflow to allow free airflow in during hot summer months and can be closed to keep the cold out in the winter. WindyVents are sold in pairs and install in as little as 30 minutes. Get your revolutionary WindyVents today and say no to your hot garage. You don't have to leave your garage door up to cool your garage anymore. Vent it 24/7 with WindyVents. To get yours now, go to windyvent.com. Get 10% off your order. Just enter the word Shannon as your coupon code. Don't wait. Go to windyvent.com. Windyvent.com. That's 2 E's. windyvent.com. Installation not included. See windyvent.com for certified installers and for more information. Restrictions may apply. See website for details.